All right, guys, welcome to our video. This is a blind stock analysis. What we're doing here is we're trying to focus on the numbers of a business as opposed to being swayed by our bias towards or against the business. We've done this several times in the past. It's extremely popular. Mo will sit here and show me the financials. He knows the company. I do not. I'm going to go through a little bit of our process, our 8-pillar process on what we look for in a stock. We're going to go through some major metrics, and I'm going to try to guess the company as I go along. I'll make some guesses early on. Later, I'll probably change some things. But as a spoiler for what happened in the past, the very first one we did, I got right. And since then, I haven't got a single one right. So
you put the Maloik on yourself.
Yeah, it was incredible. So can I turn around now?
Yeah.
All right. So this is the main page of our software. It's actually 8 pillars page. All right, so this is interesting. Okay, so high return on invested capital. So I immediately thought software. But then I go to price to sales ratio, that's probably not software. So software businesses tend to have really high return on invested capital, but also mid to high single digit price to sales ratios. So my initial reaction is, okay, probably not that. No dividend, increasing free cash flow, gross profit pretty high, 52%, and a bottom line margin are pretty consistent. Okay, 1-year PE, revenue of $15.8 billion. Huh. Well, I'll tell you right now, I really like this company buying back a lot of shares too, but the price might have been really high before. Because look at these PE and this price of free cash flow. Okay, no guesses so far.
Income statement?
Let's go see it. All right, almost doubled in the last 10 years. Big jump after COVID. That's sustained itself.
Yes, it did. They did sustain themselves for sure.
Boy, look at the steady net income growth.
Right.
Literally not a single down year.
You want to see more income?
No, not needed.
Okay. Well, you already know about shares, so yes.
Yeah, I already know about shares, down 30%. Actually, let me see the shares. Wow.
Aggressive.
Wow.
Yeah. Aggressive and consistent. Which is
wow, 36 million shares outstanding 10 years ago, guys. Now it's 19.8. That means if you're a shareholder 10 years ago, you own almost double of the company that you owned before. So if you own 10 shares, those 10 shares now give you almost double the amount of revenue and profit and cash flow you've gotten before. Let's go see the balance sheet. So now I'm going to look at the debt in the company and see what it looks like. Current assets, $6.25 billion. Scroll down. Let me see the long-term.
I have a little bit more if you need more.
I need to see the next one.
Okay.
Oh, so their current liabilities don't cover their current assets, correct?
That would be, what was their current assets?
I think it was like $6 billion.
Let's go back to number one.
6.25. Yep, I can't even guess what sector.
You can't guess the sector yet?
So when current assets are less than current liabilities, that tends to be like restaurant business, maybe? Yeah, but 52% gross margin might be high for a restaurant.
Restaurants. That is very high for restaurant business, just in general.
Oh, I know what it is.
So
Chipotle.
No.
Darn it.
Incorrect, sir. I see the cash flow?
Yeah, let's see the cash flow statement. I don't know what that's going to do here. Can you put it over here this way, Mo?
Which way?
This way. Boy, look at this. Just growing cash flow. One down year. Barely down.
Barely down.
Depreciation, big depreciation and growing. So it's an expanding business. So look at that. Depreciation expense is growing, which means they're growing. Interesting.
You want to see more of the cash flow statement?
No. Okay. Yeah, let me see the acquisitions part.
Okay.
No acquisitions. Only one acquisition. Go back here. So look, guys, no acquisition except for one back here. Or one sort of net equity. Okay, so it's growing it's definitely locations. So it's definitely like a retail. It's a retail or it's some sort of retail or food industry, something like that. Is that a correct statement?
Yeah. I know I think if I gave you the price, you would be able to figure it out.
So it's something like is it like an Autozone or something like that? It's Autozone.
Yep.
Yeah, it's Autozone.
Did my hints of price help?
Yes, it did. I thought Dollar Tree for Dollar General, but I'm like, okay.
So, because their current share price is like
$2,500.
So yeah. I wanted to omit that, and that would have thrown it off.
So the reason, so that's what the final thing was. But I remember, and by the way, I love AutoZone.
That's the thing.
The stock, and I'm looking at this now going, damn, I really want the stock. Yeah. Like if this is, the PE and price of free cash flow kind of going to go, because the growth isn't that much.
After you looked at the income statement, I thought you were going to get it. That's when I thought you were going to get it because I knew you loved AutoZone in the past.
Man. All right. Well, that's good. But I can't take credit for that one because Mo did tell me the price would give it away, and he was right. $2,500 aren't many stocks that are. And I've been looking at AutoZone since it was $1,000.
Yeah, we were looking at AutoZone during the pandemic.
Yeah, we were. So anyhow, guys, let's go look at the stock analyzer tool and now figure out what we pay for this company. All right, guys, so stock analyzer tool. I pulled it up on our software. If you're new to this channel, I'm Paul. I'm a value investor. You see the way I do things. I look at the numbers first. If the company makes sense from the numbers, I do a deeper dive into the qualitative aspects of the business. AutoZone, love the numbers, except for the free cash flow multiple and the earnings multiple. That's why we use the stock analyzer tool. In and of themselves, those numbers don't do anything. You have to look at the growth potential of the company. Now, what are my concerns about AutoZone? I don't know how it's going to affect their business if the entire country becomes electric vehicles. Like, does that really affect their? I mean, I don't know. That's a good question. They still have moving parts in there that need to be lubed up and crap like that. And maybe they pivot to few. I don't know. The whole point is, that's a big factor in the assessment of AutoZone that I want to look at. How are electric vehicles going to affect their ability to sell certain products? Or does it expand them to so many other products that it's awesome now? Do they partner with somebody to say, hey, we're the official Tesla, Apple, and electric vehicle, blah, 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 or something in the future? I don't know. So, Mo, give me some revenue growth numbers for AutoZone over the next 10 years. And we are doing a 10-year analysis.
Okay.
Remember, we want to be conservative.
What about 3, 6, and 9? 3 is super conservative. 9 is about average. Good.
I think 3, 6, and 9 is great.
Okay.
Profit margin. They've done the last 10 years, 12.7, last 5 years, 13.8.
Maybe 11.5, 12, and 12.5?
Yep, 12.5 and 13.5.
That sounds good.
Great. What about free cash flow margin?
Same thing for free cash flow?
So I'm going to go
a little higher.
I'm going to go 11.5, 13, and 14.5. Because if you look at the last 5 years, they've really increased their free cash flow margin.
Okay.
So maybe this is an uptrend.
Okay.
All right. What about multiples for PE and price of free cash flow?
I kind of want to go 12, 14, and 16 here for PE.
Okay, 12, 14, 16 on both. Now, what about your desired annual return?
So maybe I'd go here with like a 13, 13.5.
Okay.
Just because I do want a little bit more margin of error. Margin of safety.
Okay, so I'm going to do 13, 14, and 15.
That sounds good.
Analyze button. The stock is currently at $2,145. All right. Low side, 1,000. High side, 1,800 to 1,900. Middle range, about $1,300. So
I think that's pretty fair.
Yeah, I think so too. Like when the thing was at 1,200 or so, I remember thinking to myself, I'd buy this thing at 800 or so. That was my number. Yep. And the stock has just skyrocketed. And I don't think the fundamentals have gotten that much better, but I do think that it's gotten enough better where you sit there and go, okay, I do think this number is here. I think I'm actually going to put it at $1,400 for my price target on our software. So now my software and my app are going to notify me when AutoZone hits $1,400 a share. If it does, then you might sit there and say, it'll never hit there. Okay, then I never buy it. Or I wait till the fundamentals get if the stock goes this way for a long time, but the fundamentals go like this, I'll eventually have a point where I can buy it. And I'll just do that. And I'll just wait it out. Yeah. Mo?
And I don't necessarily know how the options are, but maybe this is one where you go out 8 months and look at options.
Why don't you do the day trading and I'll look at the options.
Okay. So guys, this is an interesting stock because it is one of the very few stocks that is still really close to its 52-week high. A lot of stocks have been beaten down in the past couple of months. This has not. And it is it's almost a power stock. So what a power stock is, a stock that is over all 4 major moving averages, making new 52-week highs. And we are getting there. So if I'm you, I'm keeping this thing on a very tight watch list and seeing if we can just get this upward trajectory, buying volume to coming in and just kind of catapult this thing over that 52-week high. I'm actually wildly shocked right now. Wildly shocked that this is sustained all of the volatility in the market. And it's gotten pretty good volume. So definitely something that I want to watch breaking over that 25-day moving average. Guys, remember, you can upgrade to the Bid and Ask Nation for 1 month. Risk-free. You jump in, you try it for a month. If you don't like it, you can go back down and pay your current price that you're paying. All you have to do is email Nick, help@everythingmoney.com. Come and try it out for a month. Come and join me. Paul, what do you got over there?
All right, so let's pull up AZO. Now, guys, options on this are going to be very low because it's a $2,100 stock. It's like not even coming up. Puts on AutoZone for August 19th. Let's go out to January. Okay, so here are the options for January 20th. Now, here's what we're trying to do, guys. We're selling puts at lower prices in the future. Somebody's going to give us money for the obligation to buy the stock from them at a certain price in the future if the stock goes below that. So as an example, AutoZone's $2,145. right? So if I sell a $1,900 put for January 20th, if the stock falls below $1,900 on January 20th, I'll be forced to buy it back from somebody for $1,900. But guess what? They're going to pay me $81 to do that per share.
Per share.
But you have to buy 100 shares at a time. So let's go further. Let's go back to our $1,400 price. Mo, it pays $16.
That's for January?
For January 20th, 2023. It's like a 1% return so $16 out of $1,400 is about 1.25% for about half the year. So it's basically 2.5%, 3% yield on the high side. But it only has a 5% chance of hitting that, according to this.
Yep.
So I'm just going to wait it out on Autozone because there are better options to sell for puts in the future. So if you like this video, guys, please subscribe to the channel and also watch the next video on our full 8-pillar process so you can understand our entire process much better. Thank you very much.